What is going on, guys? Welcome back to the channel. If you're new here, my name's Kai and I have been documenting my investing journey for about a year now, showing the ups and the downs and the progress of my stock market portfolio as I continue to invest for the long term. It's the first stock market portfolio update for this year, and last year I had some incredible feedback, so I appreciate all the comments and the likes that you guys have given me. So yeah, really excited to get involved and show you guys what I'm going to be investing into this video, as well as the current stocks that I'll be potentially looking in coming this year. But before we get started, it's always great to recap what happened last year, because despite what analysts were saying last year about a potential bear market, slowing economy, AI bubbles, there was trade wars, and obviously we're still at quite high valuations. The S&P 500 did top out at just over 16%, which is again another great year, another double-digit year to be invested into the market. So if you got involved, big up to you. If you haven't, again, make sure this video is, a warning sign, not necessarily a warning sign, but a bit of motivation for you to get started onto your own investing journey. Of course, none of this is financial advice. Everything that I'm sharing has worked with me, and I'm just simply documenting what I've already built and continue to build on this channel. This is again a third year of positive returns for the market, despite a slight correction that happened back in April due to Trump's trade tariffs on a lot of different countries around the world, which I personally took advantage of to buy some specific stocks such as Amazon, as I continue to hold them within my portfolio today. Anyway, with that being said, in today's video we'll be discussing the current state of the markets and what professionals such as analysts are forecasting for 2026, my portfolio and the current holdings, and we'll also be doing some live investing at the end of the video, so make sure you watch until the end so you get a bit more context of my thought process and what I'm looking at. Now, analysts and forecasters are often very much wrong when it comes to stock market predictions and everything around that domain. So you're probably thinking, Kai, why do you do research and look at what analysts are saying when they are wrong the majority of the time? Which is probably because they're incentivized by different things and metrics compared to what the retail investor is incentivized for. And for me personally, it's about digesting what other people are saying and synthesizing that information of what I've already picked up to come to my own decisions. And I'm always open to hearing new thoughts, whether they're within my bias or against my bias, whether they're bullish or bearish or neutral, because it's important to get a real 360 understanding of what different people are saying, and most importantly why they're saying that thing. For example, this year analysts broadly think that we'll still post positive gains in 2026, but much more modest compared to what we have seen in previous years. So single digit percentage returns, maybe mid-teen returns as well, compared to an explosive rally that we have seen in previous years within the S&P 500. This could be because of stronger earnings growth that is forecasted and potential interest rate cuts that we could see this year, which is obviously bullish for equities. On a side note, I also think we'll see some more IPOs this year. When we look at previous years, we haven't seen many IPOs or even acquisitions. So I think this year we could see some IPOs such as SpaceX and OpenAI, which I think could add some positive sentiment into the market and add more liquidity into the whole ecosystem as well, which is obviously great for investors. Now, although analysts seem a lot more positive this year, it's important to note that these guys, they do not have a crystal ball. They do not know if the market will go up and down. All they are doing is posting thought out predictions to post maybe a narrative around their firm or a general opinion of the market, right? So take their opinion as an opinion, look at different reports, and really understand that your capital is always at risk when investing. So make sure, from even a psychological point of view, you don't invest more than you can afford. That's what I personally do. Again, I'm not an advisor, but it's good to look at other sources of information too. With that being said, let's dive into the portfolio, show you guys what I've been investing in and if I'm going to be investing in particular stocks potentially this year. As we can see by the initial account value, we sit on just over £43,000 with a rate of return of 58.8%, which again I am super happy with. And if we dive a little bit deeper, we can see that I still have some cash left in my cash ISA, which all I do is I transfer the cash from my cash ISA to my stocks ISA every single month, and then that's when I invest. So I use almost my cash ISA, you could say like a savings account, as what it's intended for, but I don't like to keep too much cash in the bank. So as we can see down here, obviously the S&P 500 is my most dominant holding. This is like the sun of my portfolio, and I sit on just over 20k within this. Now, it's important to note I've been building this up, investing monthly, dedicating a portion of my income to investing for just over 2 years, I believe now. So it has taken me a bit of time to get here, and I'm happy with the numbers. So I will continue to invest in the S&P 500, as again, I want that to be the main holding of my portfolio. Looking down, we have Alibaba. Alibaba is a stock that I bought last year, and I invested £5,000 into this company, and we're up just over £2,700. And there was numerous reasons why I first bought this company, mainly because they had a ton of free cash, they were buying back their own shares, and they were reinvesting back into the business. Of course, we have seen a lot of trends around AI being at the forefront of sentiment at the moment, and Alibaba was really leading that, and still is leading that when you're looking at dominance within Asia, right? I like to see Alibaba almost like the Amazon of the East, essentially. They are involved in many different businesses, from cloud computing, logistics, and obviously their e-commerce side as well. The company is still reinvesting its profits back into the business to fuel the AI growth. So we may not see the returns just now, but in a few years' time, if they have made the right investments, they'll obviously have a return for their shareholders. And naturally, when you see a rally, there will be some profit taking too, which does impact the share price, I guess, in the short term. Next on the list, we obviously have Amazon. This is a company that I bought back in April when we saw a bit of a pullback due to Trump and their tariff sentiment. And I invested 5k into this company, and we're just up 26% at the minute. And for me, Amazon's one of those companies that is again involved in so many different businesses. A lot of people are obviously using Amazon's products every single day, and it's a very sticky product. I see they have so much diversification when it comes to industries. It's hard to really think about who can really challenge Amazon at what they're doing at the moment. They have obviously a great footprint in cloud e-commerce, and they're even investing into things to compete with Elon Musk's Starlink company as well. So it's another great company that I'll be holding for the long term. It's not something that I'm trading at all, and we can see we've made some good progress on this stock at the moment. Next, we have the Vanguard's VWRP. This is again a much more diversified ETF compared to the S&P 500, because there's over 3,500 stocks within this ETF. Now, although you could argue that it is still dominated by US equities, it does give me a bit more diversification into emerging spaces and even into regions such as Europe and the Middle East. So it's another position that I will be continuing to build up this year, because for me, diversification is important. It's simple to buy this ETF. It's still very much cost effective, and it's another ETF that is accumulating. So any dividends that are paid out will just automatically get reinvested. Probably should have done the same with my S&P 500 one, but it's not the end of the world, because the dividends I do get, I can still manually invest them too. Next, we have our FTSE Emerging Markets ETF, which I haven't contributed in a while, and that's simply because there's already that diversification in the FTSE All World. So it's not an ETF. I may sell it, maybe. It's not the end of the world, because I'll just reinvest that cash back into the All World. But nevertheless, it's a position that I still have that kind of just sits there, and it's doing pretty well at the moment. So again, there's nothing really to complain on that side. But this is when it comes to when you start investing, you start learning about different ETFs. A lot of the ETFs will have some overlap in it as well. So once you understand that, you can make your portfolio a lot more slimmer and simpler than what it actually needs to be. Then of course we have Google, which has been an absolute rocket ship, moving like Nvidia, you could say, at the moment. But it's a stock that I already bought on my FreeTrade account, which I had a general investing account on, and I still hold to this day. So this position is smaller than the one I have on my FreeTrade account, but I'll put some screenshots here of both Google and Microsoft, the positions that I do have and I am continuing to hold. Reason being is because I don't see the need to sell Google. It's obviously doing a lot within AI. You could say they're becoming more dominant than OpenAI at the moment. Gemini is again a great product, and they have a lot of different businesses. So even YouTube, they have the cloud computing side as well. So Google, again, it's another great company, and I don't see myself selling this anytime soon. The only regret I have is not buying more back when I first made that investment, I believe back in maybe 2023, 2024. Now, although I've got stocks in my portfolio, it's important to note that I do not go out looking for stocks to buy, because investing in stocks does hold its own risk naturally. Even we can see that most large cap fund managers underperform the S&P 500, which is typically their benchmark. So it just goes to show how challenging it actually is to pick stocks consistently, and I'll only get involved into new stocks as and when I feel there is a good opportunity, and a well-researched one as well. With that being said, this month we'll be investing in our S&P 500, and we'll be continuing to build our position in the all-world ETF as well. So 750 in each of those ETFs, and it's pretty routine for me at the moment. I don't see any other ETFs that I want to add necessarily to the portfolio at the moment, so I'll be sticking with those two. So guys, I hope you enjoyed the video. If you did, let me know down below in the comments, and I'll be curious to understand if you are also invested into the markets this year, or you have been. So put a comment down below, say invest if you have. I'll be curious to see how many of you guys actually invest and how many of you guys are looking to start and get invested. So yeah, I hope you enjoyed that, and I'll see you on the next one.